And GZERO is still here at the annual World Bank IMF spring meetings. I wanted to introduce you to another member of our team from GZERO. Matt Kendrick is a senior writer on GZERO Daily, which of course is our daily newsletter. You can subscribe, go to gzeromedia.com. So Matt, first of all, it's great to see you.
Thanks for having me.
So I would say if a theme has emerged for me this week, it's that there's very much a tale of two global economies, right? You have the rosiness on the one side of U.S.-led growth, the fears of recession put at bay for now, for sure. But then on the other side, there are some red alerts about the poorest countries. Is that a fair assessment?
I think that's completely fair. The only thing I'd add on the developed country side is China, where we're seeing a lot more unpredictability, uncertainty, and the recovery has failed to take hold as they're still dealing with a rumbling property crisis. But you're right that on the other side of things, we have dozens of low-income countries that took out loans at interest rates that have since gone way, way up. And it is putting tremendous pressure on their balance books. In certain cases, it is affecting how much they can export and import, the relative strength of their currency to the dollar. And those are the economies that the folks I've spoken to seem to be expressing the most concern about, dragging the world, if not into recession, from a full, robust recovery because of the massive debt in the developing world. So the IMF and World Bank are really designed as institutions to help tackle that problem. And I think what we're hearing is that there need to be changes in procedure to allow for this kind of disruption, to essentially ensure that this kind of disruption does not interrupt the progress of development that the institutions have helped.
Yeah, and I'm going to ask a bit about that. I wanted to, though, point out, you wrote today about Somalia particularly, which is turning out to be more of a success story, somewhat unexpected.
Yeah, absolutely. While everyone else has been paying attention to other countries over the last 10 years, Somalia has benefited from something called the Highly Indebted Poor Countries Initiative. Basically, they managed to implement massive reforms to their internal financial system, going from something where there's no formal budget, if they pay salaries, they're all in cash, unaccountable, like it's just a giant mess, barely functional government in 2012. They managed to get a fully digitized payroll set up. They're controlling their entire financial system and have a proper budget process now. And because they met those guidelines, while still in a very fragile environment where they were fighting Islamic extremists in the country, dealing with semi-autonomous zones in the north, they managed to discharge 90% of their debt. Debt went from over $6 billion to just over $600 million. And it's proof that even in very fragile countries, if, as the Somali finance minister said yesterday, you build these projects into nationally unifying efforts to build a better future, they can have tremendous success. And Somalia, while still dealing with a lot of problems, is so much more stable now than it was 10 years ago, thanks to these programs.
Yeah, and that's an interesting point that we've moved away from a world where we can tackle one crisis at a time, go back to a period of relative calm, move on to another crisis. And it also begs questions about just the structure of these financial organizations themselves and their future, right? And how they're going to do business moving forward.
Yeah, I was in a session today with Lord Mark Malloch Brown of the Open Societies Foundation. He's the former Deputy Secretary General at the UN. And he made the point that when these institutions were founded in the 1940s, humanitarianism was thought of sort of as this thing that happens between conflicts. We have a war, schools are destroyed, people die, education falls by the wayside, and then afterward, the bank and IMF come in to stabilize and help with development programs. He says that doesn't work anymore. Our conflicts are becoming a day-to-day part of our lives all over the world. These are long-term things. In Myanmar, there's been more or less a civil war running since 1949, right? That means that the IMF and World Bank, in order to make progress on development, have to figure out ways to work with the institutions in these countries as they are also in conflict. Gassam Salameh, who was also at this panel, pointed to his experience in Libya. He said that when he got there, his remit was to come up with a ceasefire. But the way that he achieved that was by helping with currency stabilization, establishing an independent central bank that was not accountable to either of the rival governments, things that were not in his remit. He said you have to leave your textbook in its drawer and go out and deal with the situation as it is, which will require much more flexibility on the parts of these institutions, as well as some trust-building exercises, not just here, but at the UN and other international institutions as well.
Well, to your point about crippling sovereign debt, these organizations have taken quite a bit of criticism around the way historically they've done lending and financing that might have led to some of these situations. So to what extent is this also a bit of a referendum on where we're moving forward with financing and how?
Yeah, I think it is a referendum. I think that we've learned, we all kind of got fooled into this low interest rate environment during the 2010s. We thought maybe the ride could last forever. And we're seeing now that the economy, best laid plans, economic plans are subject to unpredictable things like the COVID-19 pandemic, which threw the whole world off, threw all of these economies into serious disruption, and more seriously disrupted the social development of a lot of poor countries. So in that sense, yeah, I think the IMF and World Bank are struggling to find a model that does not victimize or penalize countries that are trying to help for things they can't control, but at the same time doesn't reward, I think of Argentina, 21 or 22 IMF bailouts over the last 100 years. And it just never seems to get to a place where the structures in Argentina actually change. So perhaps the IMF and World Bank need to be thinking more about their social and political role in addition to just the financial role in order to make sure these development programs are reaching the people they need to reach and not marginalizing certain communities or empowering bad behavior.
GZERO's Matt Kendrick, thanks so much.
Thanks, Tony.